welcome back to You Heard From a CFP. My name is Matthew Coyle. Today I'm in my office in downtown Minneapolis, and we are going to talk about financial planning and how financial planners evaluate whether or not you are on track to meet your goals. What tools do we use? What do we look at? What do we consider? What are the basics? I don't want to get too far in the weeds, but we'll take a look at it. And hey, it's freezing outside. There's nothing better to do. Let's be useful. Let's dive in. Thanks. Well, if you've never worked with a financial planner or a financial advisor in any capacity, you probably hear the term financial planning and it's a bit nebulous to you. Maybe you don't know what it means. In the simplest of terms, what I do with my clients and the folks that work with us at our firm is we try and put them on a good financial footing now and in the future and make sure they're making good decisions for themselves. And that's at the basic heart of what a financial advisor does. That's pretty oversimplified, but that's essentially what we do. So I'm going to show you a hypothetical case of a client that we have worked with for a couple of years. It's a real client with the names changed, obviously, for privacy concerns, and we've received permission to do this from them. So I'm going to show you, I'm going to share my screen, and we'll go over. Now, what we do with a client, we send them, there literally is a thing called the Know Your Client rule, and every financial advisor has to know their client before they make a recommendation. In order to do that, we send them a private link and a private access point to a portal that is a cloud-based planning portal where they can provide us information on assets, income, savings rates, all the things that they have accumulated over the years or are accumulating at that point. And we show them the direction they're headed and how they can improve that direction. That's basically as simple as it gets. So what tools do we use? What we do is we give them permission to populate this portal. And as they go through it, they'll input all the usual suspects: age, income, assets, dependents, things like that. And some of their goals, expectations, concerns they may have that we might address in the planning process as well. We go through, they tell us what retirement date they would like, how long they think they're going to live, if they plan to move to another state in retirement, which of course affects their taxes, and of course about goals. What do they see themselves doing? What kind of purchases do they need to make? What kind of purchases do they want to make? What kind of living expense would a person want? In this case, this person has indicated they would like to have some type of an $80,000 after-tax living expense when they retire, when they're in their older years, which, given their lifestyle, is entirely reasonable, and their assets. So what we do is we build this profile for them with their information, and we come to a current scenario as to what the odds of them achieving these goals are. And we start with running a current scenario and then compare it to a recommended scenario. Now, in this particular scenario, we calculate there's about a 99% chance that, given the savings rate this couple has, given the odds, the savings goals they have, the odds of funding all of those are about 99%. So we look for at least 70 or 75%, preferably above 75, because we know that if we can get to 75%, that's a viable plan for a potential prospect, for a potential client, and that should equate to them being able to withdraw somewhere between 4 to 6% of their retirement assets each year in retirement, assuming somewhat normal circumstances, unless they have really huge spending goals, and then we can talk to that person about it if the goals are not met. So we start off here. This particular client has a 99% chance of beating their goals, which are fantastic. But how could we improve this, or what could we show this particular client as far as, what are the odds of hitting a higher level than that? What could they do in addition to that might make their life more fun or easier or more rewarding for their kids or what have you? So from there, we build a recommended scenario. And that recommended scenario is based on the assets that this person particularly owns now or might own in the future, and we can build different scenarios. From there, we can run concurrent scenarios based on the recommended scenario. And as this calculates some new numbers here, it updates every 15 minutes. We can take the asset models that this current client is investing in. We can compare them concurrently in columns next to each other on a what-if worksheet type of arrangement, and present them with a formal report saying, if you have your current scenario runs its course as we think it may, you have a 99% chance of funding everything you want to fund. In that case, the client might come back to us and say, hey, we anticipate we might want to spend more than that. We can run that different scenario. And in this particular scenario, we've actually run some different income assumptions here for this particular client. We started off with an $80,000 assumption here in the middle left of the page. Then we ran a $100,000 assumption. And these are all after-tax income. After-tax income numbers. We ran $120,000 and $140,000, and these are all based on the assets that this person has, the savings rates that they are currently saving at, and some assumptions, reasonable assumptions about inflation and what's going to happen in the future. So everything inflation adjusted, we calculate that this particular client has a range starting from $80,000 of after-tax income in retirement all the way up to 140. That range is about a 99% odds of funding to about an 80% odds of funding. And again, we look at everything north of 75 as a viable financial plan going forward for this particular client. So this particular person, this couple sets up really well for the future. They're doing everything right, but if they were doing something wrong, we could certainly walk them through that and make some suggestions on a reasonable level as to what they could do to improve those odds. Okay, so once we've done that and we've gone over various scenarios with the prospect or the client, at that point we can sit down and we can come to a recommended scenario. We can compare their current scenario and their current portfolio, what they own, to a composite portfolio or a recommended portfolio that we feel would get them where they want to go, or at least give them the highest degree of chance to get where you want to go. So from there, and I'll share my screen here again, we can present them with a composite portfolio, a recommended portfolio. Now in this particular case, this client has a lot of cash. I mean, they're like 40 or 50% cash, which is a crazy high amount of cash for someone at that age. There's just no need to have that much cash at that age unless you're coming up with a huge purchase in the next year or two, which this couple is not going to do. So really in this case it was just convincing them that it's in their best interest to reduce that and then reallocate their portfolio, and then we can present them with that option going forward. So in this particular case, you come up with a series of recommendations regarding what we think, and we come to that with a combination of in-house research. We have fund analysts and things at our firm that do research on funds, and combined with our own knowledge, of course, that we have over the years of working in this industry. We have a lot of very seasoned advisors here with a lot of talent here at ACG, a lot of 20-year plus people in the business. So we have a lot of experience in picking funds and knowing kind of what's out there and knowing the managers and such. So a lot of resources to lean on. So we come to a recommendation, and then from there we give them access. We give this particular client access to their snapshot page so they can monitor their own portfolio once those changes are made. And they can monitor how they're doing, which again updates about every 15 minutes when market values are updated. So in this case, they can monitor how their recommended scenario is doing. In the upper left-hand corner, they can link accounts up here if they'd like to link investment accounts or credit cards or bank accounts or whatever they have that they'd like to link. They can link it here for monitoring. They can create expense and income reports for themselves and track spending, create budgets, that kind of thing. That's all pretty groovy there. They can go back to their snapshot. They can get details on what they own, what category it's in, right now what their portfolio is doing, net worth, all that good stuff. And that's all fun and dandy. And then we meet on a regular basis to review how they're doing. And I think these guys I usually talk to these folks a couple times a year. And then we just make decisions and go from there. So it's a nice way to monitor things. It's a nice way to work with the client, not just in person, but remotely as well, because that's the world we are definitely moving toward, is remote work and remote meetings, which a lot of our clients really like, actually. And I like it too, to a certain degree. I love FaceTime, but of course, remote is just a lot more efficient. So anyway, that's in basic how we work with a client. We give them the tools to understand where they're going. We give them the tools to understand where they are right now, and then we monitor things on an ongoing basis. And at the very, 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 very basic level, that's what a financial advisor does. Of course, there's a lot more to it. I could talk in more videos, but at the basic level, that is how we work with clients. Show them where they're going, show them what the possibilities are, show them how they're allocated now, show them where they should be to get to those goals, and then help them monitor those goals, giving them tools like we have. So that is where I will stop it for now today. Thank you again for watching. I appreciate that your most valuable asset is not necessarily your 401k plan, but your time, and I appreciate that very much. So I will leave it at that. Take good care of yourself. Take good care of your family. Stay well, and I will see you next time. Thanks.